the operating would be in a distributed way. Everybody has to go digital, go big in the digital way. You need to reduce across the high touch kind of and get into low touch or no touch kind of engagement. The consumer journey has to start from the digital or a consumer phone, or how do you begin the journey at home. So
Yeah, I
in
just
that
want to make
sense,
one last point,
yeah,
Sanjay, if I may. I
yeah.
think it's very important. Every investor I know of is doing what is called stress test, scenario testing on the companies. What if the business slowdown lasts for 3 months and 6 months and 9 months? It's very important to do that quickly and touch base on that very frequently. And investors will, I think there's a demand on investors, which is very, very important for investors to realize. It's not just the entrepreneur. Entrepreneur is not alone in this. It is the investor who has to put a shoulder to the entrepreneur. It's very lonely for the entrepreneur at the top. So investors have to pool resources. There are some funds globally. I won't be able to name them right now because I think they should be announcing some packages right now. There are rescue packages which certain funds are already working on. There are debt lines. There are working capital lines. In the next 2 weeks, you will actually see a lot of them coming through. I saw a question about some of these issues. So keep a watch out for that. But
Absolutely.
investors must put their shoulder, and they will. So make sure you are in touch with your investors very, very hard.
Sure. So continuing to that, Sudhir, let's begin with you on the next moving gears kind of. What are you open for business? Is there any change in your investment thesis? Would you offer term sheets and investment in this current scenario? What's your outlook? If you can begin across, and then I'll move to other investors.
I think if I look at immediate, urgent, we are completely absorbed with supporting our portfolio companies as a first priority right now. And every VC has reserve capital, which they need to pool into and see how to help their VCs, and also engaging with LPs, because our source of capital is also with LPs. So the first thing which we are involved in is enormously spending time with all our portfolio companies, CEOs, and seeing how can we help them, how much capital is required, in what time frames, etc. And those, in our parlance, is called a stress test. And that is being shared with our investors so that we can actually get, if required, more capital down the line. Some cases we'll succeed, some cases we won't. But that's the first thing. The second one is we have to take care is there are certain term sheets which are signed, okay? And those business models and revenue models are also changing. We have to take care of what to do there and how they'll be affected. The third priority for us is term sheets not signed, but we verbally said we want to go ahead. So these are the three priorities which we have done. And then new investments will pause for a few months or slow down before they pick up.
So right now, what I'm taking is raising new funding for all the startups would be little paused for a month or two while you are settling the current portfolio and the term sheets which has been given across, or commitments to honor across. Let's go next to Jishu. What's your take on this in terms of, are you open to business? Is there any change in investment thesis? How are you looking at new investments?
So very similar to what Sudhir mentioned, I would like to add a couple of things also. Great, we have seen it across other downturns also. Great businesses actually start during such times. And in such times, often entrepreneurs, because of course, funding is going to be difficult, but many entrepreneurs kind of dive in, and not because they are seeing that others are building business, but because something which you're really passionate about. So great entrepreneurs are born in such times, and great businesses are born in such time. So we are definitely, our priority remains and have to be with portfolio companies, but we are also spending a lot of time with newer modern entrepreneurs, and day in day out, we are also talking to new businesses which are coming up, and just seeing how things. So to answer your question, we are open for business. Okay. The bar is going to be high, and probably in such times, it might be.
So the bar is going to be high. Entrepreneurs need to prove their value before valuations. So that's how things has to be kind of in this current times. Thanks, Jishu. Moving over to Amit, what would be your business view? Are you open for business? How are you looking at your new investment thesis in this new turmoil?
Yeah, so Jungle, fortunately for us, we set up the team structure in a manner where the investment team and the portfolio, operating team or support team is completely separate. They're distinct. And so for us, that helps us, as the intensity on the portfolio side goes up, the investment team is still fairly insulated with it. In fact, we've just closed our second investment for the year while all this is going on. So to Jishnu's point, I think by having two separate functional units, it's kind of helped us deal better internally with the situation. We are a concentrated portfolio manager, though. We tend to write only 5 to 6 investments a year, despite an upturn or a downturn, and I think that's what we will do. I'll probably flip this around, and from an entrepreneur perspective, my question would be, why would you go out and raise money in this environment? And there are two types of entrepreneurs that have raised money before already, and then entrepreneurs that have never raised before. And I think if depending upon which bucket you're falling in, your strategy should be completely different. If you have raised money before, then I would be encouraging you strongly to just go and focus on your existing investors. Like Sudhir mentioned, they are responsible for your well-being. Their LPs are making sure that they are responsible for your well-being as well, and they are going to be the biggest potential source of support at this point. Who they know you inside out. They know that this may be a temporary challenge for you. Any new investor you're going to engage with is going to find it significantly harder to get convinced at this point. So if you've raised money before from investors, your best source of support is going to be the existing investors. I don't think going out at this point is going to, it may help you, but it is going to take a long time. Great. If you've not raised money, sorry, Sanjay.
Yeah, go ahead.
Okay. No, I was just going to close my comment. If you've not raised money before, which means you're a seed stage company, or maybe you raise seed money from the angels and you're looking at a Series A stage company, then I would say it's a much tougher journey out there in the next few months. But again, you got to find your networks, you got to find your angels, your seed investors to line you up to Jishnu and us and others of the world that are still open for business and get that warm introduction in. I would pay a lot more attention on what the process in this cycle looks like for the VC. Just be very clear, there are a lot of people that are tire kicking around. I've seen that in the past cycles. Make sure you have a very candid conversation of why would you still put money in this time. Almost throw the challenge back at the VC before going in depth and spending a lot more time with them.
Fantastic viewpoint, Amit, in terms of flipping the whole stuff, saying that why raise money in these times? What is it so important? Do you have that irrational perseverance, in these times to build a business? Great. Manu, as an Inventus Capital, are you guys open for business? What's your view in the current times? Has your investment thesis changed? What's so new, and would you write checks in these current times?
Yeah, I mean, I think very similar to what Amit mentioned. We're also concentrated investors, so we do 4 to 5 investments a year as well. And these times usually are. If I look back at the last 2 down cycles, our best companies actually came during those times, right? I remember when Redbus, we were one of 4 term sheets that Fani had. The other 3 actually disappeared when the downturn happened, 2008-19 timeframe. And we looked around the table and sort of said, "Hey, we love this thing. Nothing changes. People still need to travel. Why would we not do this investment?" And we were able to sort of close the deal at that time, right? And that's just one example. If I go back and look at all the details, some of our best, Poshmark, which is one of our best companies in the US, also started at the time. Look at Airbnb. I used to work at Google, started in the .com bust as well. So the list goes on and on about why great entrepreneurs and great teams will always get the funding, right? It's actually good for great founders to not have as much crap that's running around to be able to meet 2 companies that's also raising money, right? If you don't have the conviction, if you were just a Me Too sort of founder looking to start a company, I think that would be much tougher, right? If you have the conviction, you have a team, you have the product, you go back and rethink and be able to raise money, I think there will always be money available. Anyone on this panel here would support some great entrepreneurs during these times. So having said that, even early last year, we started I mean, the stock market here had just been on tear, right? All the public market valuations were completely out of whack, right? In some sense. So whether it was the virus or something else, there was something waiting to burst a bubble, right? We've had a 10-year plus longest boom cycle in modern history here. So something was going to burst this no matter what, right? It just happened to be virus this time, right? And so we've been telling our companies to get to profitability, get to EBITDA, control your own destiny. Don't, if the market turns for whatever reason it turns, you won't be able to raise money for some time, right? And so if you don't control your own destiny, you will be screwed, right? And so we were playing triage actually starting last year, early last year. Now there are companies that we have in our portfolio that are in transportation or hospitality. They're caught no matter what they did. They couldn't. I mean, you couldn't imagine this level of shock to the system.
So that brings me to the next question, which I'll again run through all of you because this requires individual perspective so that listeners or the startup founders and investors learn about which sectors will be winners and losers. What would be your priority investment? What would you not invest in these times? Which are your favorite, or let's say, in the media terms, hot sectors which you would keen to invest across? Let me start with Sudhir Sethi. What would you invest in these times? Which sectors, top three, which you believe are great, and the losers, which are the three losers sectors, which should be very, very cognizant and fearful in these times?
Tough question. I think there's no straight answer. I would say one thing. I think in the last 1 year, and again, this is not, maybe the current situation has heightened the realization there. Yesterday's business models were at the core a business model and tech around it. And I think what we are seeing for the last maybe 1 to 2 years is in some companies which are coming in, not all, it's not a tsunami, it's a reasonably good flow of entrepreneurs coming in. They're putting tech at the middle and business model and revenue model around it. That innovation is happening extremely well in healthcare. It's happening extremely well in software. It's happening extremely highly as far as edtech is concerned. What we do believe...
Three things which I'm taking as a pick from your sector quickly is education tech, healthcare, and software, which can help across collaboration. Possibly that would be the three top sectors which you believe should be your priority.
Yeah, so as I said, tech at the bottom, tech at the middle, and business models around it. So I think these three are emerging right now. And last but not the least is where the percentage of revenue potentially, or percentage of business is dependent on digital. I think that's
so
very
digital businesses is your favorite, if I have to encompass.
Yep.
But the sectors which you would not invest, like for example, today somebody pushing you a travel deal, I'm sure that's not going to be a sector which you would be looking at to write any checks. So
Yeah.
any sectors which you believe are not so exciting for you guys right now, Sudhir?
I think travel would be one. Secondly, we would be looking for tech dependency in even sectors like logistics, because tech dependency, if it is high, let me put it this way, even corporates, if you see, they do not have a choice but to go enable tech as far as possible.
Okay.
If that doesn't happen, real issues which are there, endemic problems in the country cannot be solved, which
high touch, any business which is high touch, you would not be feeling comfortable to invest.
Yes.
Kind of. Going back, let me ask across, Jishu, what's your take? What are your top three picks, saying that these are the sectors which you believe would be all-weather business or will be interesting to invest in these times, and which are the sectors which are losers?
So, Sanjay, for us over the last 13 years, one thing we have always done, and thankfully, the portfolio has shaped up totally that way, is we have traditionally always invested and want to invest in companies and entrepreneurs with product first mindset, who is driving product led growth. By that, what we mean is that, the product essentially is all driven by technology, technology-driven sales, technology-driven operations. It's more self-serve as opposed to sales-serve, if that makes sense. So that's what we like, and that's what we'll do. It doesn't matter you are doing consumer businesses or enterprise businesses, and we have pioneered cross-border investing for over the last decade, and we have fantastic companies around that, and many of them are actually seeing a lot of tailwinds. And the fundamental is that, and even for consumers, there is actually huge opportunity. In fact, we are taking opportunities now for many of the companies in, though it might look like cost rationalization, what is actually happening is that bolstered the technology, make a lot of things technology enabled, so that as you survive, once things come back, you are best positioned to thrive. So we want that kind of mindset. We don't go by sectors. We are bottom-up investors. We won't be taking top-down. But this is even like I would say, some of our travel companies.
Vishnu,
They are drastically.
let me be very specific. If you can give me top 3 sectors which you believe are great,
So I would say enterprise, digital enterprise software where product sells itself, like companies like Postman, where I am on the board of.
Gotcha.
So things like that, self-serve. So that's a no-brainer.
Okay.
Anything that would lead to even experiences. If you look at digital content, Unacademy, we are the earliest investor and the lead investor. So things like that which can be consumed digitally, whether it's for enterprise or for
digital
consumers.
consumption, enterprise tech, digital consumption, enterprise tech. What next? Third one. Which
we have quite a few investments in healthcare, digital healthcare, and we have we'll continue looking at that, and of course there are the opportunities now will only kind of multiply here.
Gotcha. Any guidance on which are the sectors you believe are not going to do good?
Yeah, I think overall I still think that there will be a lot of opportunities and transformation in travel and hospitality. Good entrepreneurs will look at it, but right now, of course, it becomes a very tough sale. And anything that is heavy duty, which needs like a lot of kind of manual operations, a lot of kind of high touch, capital intensive businesses, those will be not in fashion.
Fantastic. Amit, your top 3 sectors which you believe you would be keen to look at deals in the space, and the losers kind of in your view?
It's hard not to be repetitive here. I'm going to try my best, but and in light of that, I'm going to only say one thing, which is, I think amongst all of this, as one of you pointed out, anxiety leading to behavioral change on the consumer side, one should also expect that there is going to be a significant change that the small and medium businesses are going to do. There is a lot of generational handovers that have been happening over the years, and I think 150 million SMEs across India, Southeast Asia. And what's going to happen is this kind of sort of macro event is going to tip over, where you're going to see a lot of these now second generation, third generation entrepreneurs say, I need to digitize my business. I cannot be dependent upon that brick and mortar store anymore, or just be dependent upon that. We spoke about companies which are winners in these sectors. We have a portfolio company, and I know it's a little bit a shameless plug-in, but this company is called Engineer.ai. They help you essentially build mobile apps almost like you would build your website. The search volume for Engineer.ai has gone up 10 to 15% week on week. And there are grocery owners sitting with 4 stores in a tier 2 city in India now that is saying, I want to build an app for my customers.
Nice.
I think that digital transformation of SMEs is going to be tipped over, and you're going to see we continue to be interested in the theme for a long time, and I think that theme probably is going to be a significant beneficiary in this.
What would you see no-go sector? What are your no-go sector in next 6 months to a year you would not be keen to look at it?
I think rather than saying no-go, I mean, we are big investors in travel. Travel has been one of our sort of best outcome sectors. We've sold a company to HomeAway. We've sold a company to Rakuten. We have another company in that portfolio. So we love travel. I don't think we're going to say. I don't think we're going to say no to travel, to be very honest.
Okay.
I think what's going to be tough, to Jishnu's point and anybody else's point here as well, I think in any business model, even if it is non-travel, what's going to be at top of a mind of the investor is going to be is that, as the macro is shifted or will shift, is the behavior going to change? So it doesn't matter whether you're in healthcare or whether you're in travel or education or infrastructure, digitization, anything. If this macro event is not going to significantly for the negatively change the behavior in your industry, then you're okay. The timelines may get extended, but you're not going to not get investment.
Okay, Manu, your picks on the sectors which you would like to look at keenly, top three sectors, and what sectors would be no go kind of in next 6 months to a year?
No, I mean, yeah, I think I would rephrase the question you're asking. I think, it's always, people always want the list of things you do or you don't do. And, we look at things, and I think most people in this panel look at things, 5, 6, 7, 8 years out. And I think it's really hard to sort of say what happens in a microcosm now. I'm going to change my entire freaking viewpoint. And I think we can't, and we shouldn't do this. And I think you get, we're paid to take long-term risk by our LPs, and we need to sort of evaluate the way it is, right? And so I would actually give you an example. If you imagine, why would somebody in 2006, why would you get into somebody else's car and pay them to drive you from point A to point B? That would seem like a really freaking stupid idea. And here comes Uber and Lyft and Ola and a whole bunch of other companies, right? Now I think, I'm not as smart or I pretend to be as smart, and I think we let entrepreneurs sort of come and surprise us. So we're open to business for every idea. And I think in this, if somebody comes up with an amazing idea for transportation, because how people are reimagining or consumers are rethinking, I want to be able to fund those entrepreneurs, and not just because I have a mental mindset that I don't want to invest in there. So we never say never, and we've always taken a contrarian approach to the market, and that has actually served us well. So I'm not going to let you pigeonhole me into giving you three answers.
Okay.
Top three, the bottom three.
Yeah, so what we are listening here from all the top VCs is they are open for business, anything which is new, which is innovative transformation, but definitely digital, low touch engagement, which works on the consumer side. The journey begins at the consumer end quickly with no touch is something what they would be looking at.
We've been doing that for the last, I think all of us have, we're all digital, technology investors here, right? There's, investing in brick and mortar stuff isn't something, we've ever done, right? And so it's always been there. Now this actually accelerates it even more. So that works out pretty well.
Gotcha. So coming back to, the next question, and this any one of you can pick it up at your end. So one of the things which typically I would look into is the unicorns, the so-called fancy of unicorn. Do you think 2020 we will add unicorns? In fact, I'm writing a note to my portfolio companies. 100 million valuation is the new unicorn benchmark. That's my viewpoint in next 6 months to a year. Do you guys see new unicorns getting added in 2020? Any one of you who can pick up this one?
Yeah, I think unicorn was just another vanity metric that doesn't help, right? And we always focused on a different way of looking at this. There's the can I get a return of fund potential from this company, right? And it's more about value creation than valuation. And I think whenever there's too much stress on valuation, sure, you can go to SoftBank and get a valuation of $2 billion, but they'll have a 3x preference on top. So you can always financially engineer a unicorn, and that's not the what will actually get you the eventual returns, right? And I think founders and VCs should be focused more on value creation rather than a unicorn arbitrary KPI, right? But that's just my viewpoint.
Yeah, I would add something here that unicorn, of course, is a very very favorite word in the startup world. What would be more important, and it will show up, is companies with strong focus to fundamentals and unit economics, and you would see those companies being valued appropriately. Like what we have seen in last couple of years is GMV driving valuation, lot of other metrics driving valuations, and people are not going any line beyond the top line. Those kind of behaviors will also change from investors. So you would see real businesses being valued appropriately. At least, that's how we are looking at. Whether it will end up being unicorn or something else, that who knows, it will just follow. But for entrepreneurs, focus on fundamentals.
I think
Sanjay,
Yeah.
there'll
go ahead.
be
Go ahead.
sorry.
Go ahead, Amit.
Okay. Yeah, no, I was so I was going to jump in here. I feel that any crisis leads to flight of capital, and flight of capital typically goes to quality, to safe harbor. And so what you'll see is no different, especially with such a big impact where, I don't even know the number because it's changing on an hourly basis, but trillions of dollars of net worths are getting destroyed. What you will see is definitely a reduction in the number of unicorn stories, so as to speak, over the next years. You got to be a serious, fundamentally strong business to be able to achieve that status. I actually like unicorns. They are everybody in life. Everybody in life needs inspirations. Excuse me. I know for founders, being a unicorn founder is an inspiration. I love that fact. What I think is going to happen is the path to being a unicorn is going to be that much more harder, which means that it's going to be that much more valuable. I definitely see a reduction in number of unicorns that is going to come out in the next many years now.
Gotcha. Sudhir, bhai, any inputs on where do you see is $100 million valuation going to be the new unicorn status?
Okay, crystal ball gazing, very difficult. But let me say one thing. In what we have seen in our portfolio and others we are talking to, there is a conscious thrust towards a very different business model to survive. And for instance, digital being one of them. And to that extent, I do believe that surprise high valuable companies will emerge in the next 12 months.
Oh,
And I'm saying surprisingly high valuable companies will emerge. And yes, there will be capital available for them. They could be suppressed instead of, X, they could be 0.75X valuable. But don't be surprised that the obvious may not happen as far as potential unicorns.
Amit, coming back to you, you see across a lot of China, you are close to it. Anything which we need to learn from China for the Indian startup founders or Indian investors and the way to look at it? Amit, any inputs on the China side of it?
So I think firstly, from a macro perspective, just some data points to share, and these are all information being passed on through conversation. So I haven't seen hard data to support this yet, but what I understand is in the last month, supply side has ramped up pretty quickly. In terms of factories are sort of filled with people again, and production started, and people are going to jobs. I'm
Sorry, I think we missed Amit. While he joins across Jishu, Manu, Sudhir, do you have any innovative examples to share across how pivots were done by your portfolio company? What kind of survival plan so people can try to learn from your portfolio what they did right to what pivot did they do? What was your innovative survival plan or guidance, and how did portfolios are coping up? Any one examples if Jishnu, Sudhir and Manu, if you can give from your portfolios.
Sure, I
Are
can
you
possibly
about
comment.
this cycle or previous cycles?
I mean, this cycle, current, flavor, what are they doing new? Is there any change in business model? How did they move from growth plan to the survival plan, right? Everybody is moving their gates. So what innovation did across? Manu, if you can start across, and then Jishnu and Sudhir bhai.
So I can give you a couple examples. I think there's no one shoe fits all scenario, and I think if you try to get to those answers, you'll get disappointed. But so we've been triaging our companies, right? We've been going through our most promising companies and actually helping them through. So I'll give you an example. So one of our companies was filing to go public this summer. That's not happening. It's not happening this year, most likely not even next year, right? But they're counter-cyclical, right? And so they have an advantage now. They have decent amount of cash, 7 months of cash left in the bank. But what we've done with them is like, hey, if your business, your revenue goes down by 40%, let's say, can you bring your expenses down correspondingly as well, so we can extend the runway, right? And doing it sooner than later, right? So in that case, when the first week, 3 weeks ago, we basically brought them down. Their marketing went from $15 million a month down to $3 million a month. So very quick reaction. The founder on his own is now cutting 25 to 30% of employees, because and you go deep, right? So there's two ways to sort of do this. One is like, hey, I will make cuts as I get more information, or you go deep. So the next time you have to make a change is actually hiring people, not letting people go, right? And so you take one cut, you reorient the team, and you focus on that piece. Your business model, nothing changes. It's really hard to retool entire business model and expect that to work and expect your customers to actually react to that fast. So, so in this case, I think they're going to come out pretty strong. They're already seeing uptake and growth, and they focus on those things. Another one of our companies, does AI for hiring, for hiring, right? And so you don't have to meet the person; you can do them remotely, right? And so instead of going after new customers, we sort of say, hey, call every single one of your customers as a CEO and the founding team, make sure they're okay, help them actually improve their businesses, from creative stuff you can do. And they've gone one by one through all their companies. We cancel board meetings across the board. I've been on the calls with the founder as well, talking to customers as well. So you have to roll up your sleeves and start helping them as well, right? And I think they see you're not just sort of pontificating and actually giving them advice, on a Zoom call, but actually getting involved and helping them. And I think that helps quite a bit. And you can't do that for all your 45 companies, right? So we're triaging it down and sort of saying, where do I have the biggest impact, and start helping them out. And then you use those examples to share with the rest of them as well, to sort of get them over the hump, right?
Jishnu, your views in some innovative portfolio company, what did they do right?
Yeah. So one thing which is pretty much across the board is we are advising companies to manage their runway for 18 to 24 months. Now, the interesting part that we always find, and in fact, entrepreneurs themselves also find, is that once that lens is applied, you actually figure out a lot of things which are not needed in the business for many different ways. Especially, I'm talking about for the grown-up companies. That's where kind of like, changes and things are more important, where, the burn has gone up and all that. So one is that, and through that, you start focusing on things that is truly matters. Many of the things you figure out is fact, and some of the cases you can also let go of certain good things for you to be able to have a shot at becoming great. One company I would say, one of my favorite companies, and of course they have taken a very strong hit here, and I would name them, is Headout. It's fantastic company. What they have done, really scaled up company, very, very frugal and capital efficient, the most capital efficient consumer company I know of, out of India, addressing for the global world. Now, of course, they have taken a big hit because they were about travel experiences, and almost all city is locked down. To give you an example, the level of innovation, and this is a very strong tech team. So they are coming up with, which was already in their roadmap, and now they are prioritizing it, is what they call DEX, digital experiences. And it turns out there is actually a lot of pent up demand. Now people have a lot of time around, and those we call global headouters, loyal headouters, they are now coming in, pinging them on this for this kind of experiences, where, okay, can you offer a virtual tour of something? And they have been creating those gallery, those kind of experiences. So now they are kind of bringing those things in the front line, on the front, along with whatever operational optimization they will have to do. Right. So this is just an example, but this kind of things are across the board. Even for enterprise companies, what can foster work from home? Because this, by the way, one point I would make, I think it's very important here. We are seeing a lot more work from home, obviously, but I actually think it would lead to a lot of behavioral change, where many functions will be done remotely. Many companies will have probably lesser number of offices, right? So there are huge amount of opportunities where it's not just about new business, but you can relook at your current business and can kind of offer the wherewithals to be more effective, or at least make the remote teams more effective. So, there are all, I would say, may not be big bang innovations, but like, lot of nuts and bolts.
Okay, Sudhir bhai, what's your view? What do you see across the innovation? Any stories which you can share from your portfolio?
Sure, love to, and there are many. Um, I think the first thing is, as I mentioned, we went to all our companies and worked with them to increase the runway. Almost half of them now have a plan by which they can have survival between 18 to 24 months runway. That is amazing because that also requires innovation. A few other causes. CureFit is a good example. Gym shut down. They launched the product for fitness at home. Amazing turnaround. Amazing turnaround overall. Mpani, they were at 80 Kirana stores doing online shopping from Kirana stores. Within 2 weeks, gone to 1,000 plus Kirana stores through viral. So CAC went down. Please understand, logistics and deliveries have stopped intercity within the mohalla, right? It is still on, by the way. Within the mohalla, it is still on. Overall, Healthify Me has actually introduced a new product for digital fitness, and in the last 3 weeks. And Cropin, one of our agro global companies, is now a tech plan to go completely digital in terms of onboarding farmers and onboarding clients and servicing them. So we are seeing innovation across the board, but fundamentally we are suggesting to our entrepreneurs that please introduce digital innovations where it will increase revenues. It could be, by the way, in some companies, it could be 30-40% of your revenues in the next 2 years.
Okay, coming next, the question which I'm picking up from the chat, what would be the impact of the valuations kind of? So your views in terms of, my personal take is the valuations would remain flat, that it's not going to be even if you are able to raise money at the last round valuations, you should take money. But love to hear all your views kind of, start from Sudhir. What do you think valuations would be? What impact this would bring to valuation?
I think it will be difficult for valuations to go up round right now because every business is under a churn right now as to what they will do. But there are, I would say, break it down into 3 months, 6 months, and 9 months as we go forward. First 6 months valuations could be flattish, but after 6 months, I do believe that successful companies would have started showing traction where business model changes have happened and tech deeper has happened. Plans are under execution with cash runways. And then I do believe some of those unique portfolio companies will see capital coming in. Incidentally, there is a lot of dry powder around the table.
Oh.
That's very important to note, that dry powder is available. It's not that the country or entrepreneurs are running out of dry powder or VCs are running out of dry powder.
Founders, please note, there is enough dry powder with VCs to invest. They are open for businesses while valuations will remain flat, but opportunities are still there to build business. Coming to Jishu, what's your view on valuations? How founders should be looking at it? Should they be even discussing valuations?
So of course they should always discuss valuations. I think two things will happen. One thing, I think a lot of, as a community, we have done a lot of things which are not right for valuation over the last couple of years. So first thing first is correction. It will just happen, and it was needed. It's just that it is coming in this way, in an abrupt way. So first is correction. The second is, if you have to raise money, cash is king for unprofitable companies. So you have to optimize on how do you get the cash. It is best if you don't have to raise money in the near term, but if you have to raise money, you have to raise money. So you have to first focus on get the right investors who are willing to believe in such, and going to partner with you in such times, and let the valuation follow, as opposed to valuation be the lead to your discussion. And as we come out of it, I think we'll be in a much better spot. I mean, in a way, though it has come in a jolt, but correction was very much needed in valuation.
Okay, so time for correction. Manu, your views on valuations. What do you think founders should be looking at valuations?
You know what? So I'll add to what Jishu mentioned. I think what he just said should be what founders should follow, whether it's good times or bad times, right? Valuation should always follow. So I think that's very sane advice for all times, right? Now, if you look at private market valuations, they usually follow public market valuations, right? All the comps, all the stuff, they sort of derive from somewhere. And if public market valuations have gotten where they are, then simultaneously you need to have re-expectations of what private market valuations will be, because at the end, you hope to be a public market company at some time, and you can't. You can't be out of whack for too long, right? So yeah, I don't have anything else to add except sanity always comes back when these things happen.
In Amit, have you joined kind of back?
Yep, I'm here.
Oh, okay, awesome. So we were more talking across your China view, and you were giving in. I think you dropped off. Can you just continue on that China side of it, because that's
Yeah,
where
so
story started, and they are ahead of rest of us.
so yeah, I think very quickly I was sharing that what I've been hearing is that supply side is ramped up pretty quickly, which means companies, manufacturing is opened up. I was told that there's a 1 quarter worth of lag in terms of global shipments from China, but things are catching up very quickly. What I'm also told is that domestic demand is come back in a strong way, and so it just probably gives us all a silver lining, a light at the end of the tunnel, that if we do come out soon enough, and contain this, then the recoil effect of something like this could be faster than prior crises. I also think it's because all governments around the world are significantly getting behind this crisis. I don't think there were as many big or sort of different sets of packages given by different governments around the world during the prior crises. So I think the stimulus is going to be significant, and hopefully, as we are starting to hear from China, things will come back quickly.
Okay. So continuing and picking questions from the chat, just clubbing couple of them, repetitiveness is there. What kind of, how do you build an all-weather business with BCP? What should now founders be doing while they start across and build these businesses? What would a VC look into an all-weather business? Like, what should be the all-weather business?
I think that's I don't think that's the right way to think about this. Nobody could have predicted this, although everybody could have predicted it, that there was going to be a virus. Everybody's seen the Contagion movie and thought about it, that someday this might happen. So in some sense, I think as an entrepreneur, you got to not overthink this macro event. Keep life simple. If you have identified a gap in the market and you think you build the, to Jishu's point, I think a technology-led solution, that's what interests all of us, to help your customer. It's a consumer or an enterprise, sort of solve that problem for a long term. You got a good margin profile out of you. You've found some level of barrier to entry, some level of disruption. The world is not going to change in 6 months for something like that. I don't think there's going to be any new secret sauce after this.
Manu, would you ask for a plan B slide in every VC pitch, every pitch deck now, saying that what would be your plan B?
No,
I think he already does.
Yeah, it's funny, but there's no way you could have predicted this. But I think what you could have predicted is actually creating a business, not just an idea or a product, right? I mean, if your KPIs are DMVs and your VCs are sort of saying, I'm going to value you based on GMV, you should tell them to fuck off, right? You should focus on building a strong company. And I think at the end of the day, businesses survive because, you make a profit. You can't buy something for $100 and sell it for $90, right? I mean, it doesn't work, right? I mean, we tried this with Snapdeal and a few other companies in India, and they realized that it shit doesn't work, right? I mean, so you have to sort of, be focused on things that are valuable, right? So I don't think any of those things change. And I also think, you should keep things in perspective, because life will move on, right? This will happen 6 months later. I mean, the markets, everything will sort of come back and it'll snap back. And China's already shown this. Other countries will show this as well. I mean, when you've gone through 3 cycles, or Sudhir's gone through 4 cycles, you come out of these cycles. So this is why it's called a cycle. It's not called circle, right? So we will come out of this, and great companies will emerge again. And I think this actually is actually very necessary. You need the downturns to clean out the shit in some sense, right?
Oh.
I mean, not to use those words, but you need to unblock resources that are stuck in bad companies, right?
Yeah.
Employees that are stuck in unresourceful things. So it frees up those resources to then actually go into more purposeful things, right? If you were, I mean, I would sort of say, if you got laid off by a large company and you were thinking about being an entrepreneur for the last 5, 6, 7, 10 years, well, this is a good time. If you have a good idea, great thing, I mean, you may actually be freed up to do those things. So I always look at the silver lining, and I think, entrepreneurs are optimistic, and they think anything is doable. And I think, us as VCs, we also get energized by these same entrepreneurs. And so it's actually a little bit contagious to work with entrepreneurs, right? So I wouldn't change it.
Contagious in a positive way. Jishnu, picking questions from the chat. People are asking on a specific sector while nobody wants to get pigeonholed, but still there are questions in terms of how do you look at fintech in these times, healthcare, agriculture, and manufacturing. These are the 4 common threads which are coming up on the chat as a question. So let me pick on you. How do you view fintech, in these current times?
So, fintech is also like health tech. I would say fintech is another evergreen area. I mean, there are always a lot of opportunities. I think the challenge that happens, and again, I have to here repeat myself. I mean, there were craziness going on in the market. We all know, in the name of neobank, probably, I don't know, we have seen 50 neobanks. We haven't funded any, but probably 25 got funded. So the question really is that, often, the sectors get made by what VCs and the ecosystem together starts thinking, oh, neobank is the next thing. Then everybody flock together. There are a lot of tourist VCs also, tourist capital come in, throwing money. So, these kind of things give a color to the sectors. Otherwise, all the things that you talked about right now, I think there is fundamental opportunities in all these 3, downturn or not. And if I'm an entrepreneur, I have an unfair observation in any of these. I'm convinced about the value I'm bringing in, and kind of I mean, I would, of course, we would love to hear who they are, and it doesn't matter whether it's downturn or not.
Fintech is on, people are looking, but idea is, does lending, SME lending, because the lending is going to be the toughest hit kind of, what would you take?
Yeah. So exactly. So, so there has to be certain things that has to so far fintech has been every road leads to lending. And in fact, I'm hearing many of the companies which are not fintech then also becomes oh, now I am in the SME distribution thing. Now we will start giving credits to SMEs, and then, that will become my. So I think, it's very difficult to say what exactly, but there are multiple ways, looking back to, okay, what is the real problem? Like in US, for example, one of the biggest challenge which is coming to the fore is that people don't save. People just all the stimulus and all that, and the need to kind of pay mail checks to people because, they truly don't have any savings, right? And there hasn't been any system to encourage that. So maybe, that's an idea, right? So I'm saying
coming to Jishnu, just to get perspective on aerospace and agriculture, Sudhir, Sethi, if you can give quick, what's your view on those 2, aerospace and agriculture? Would that space see some interest, and how do you see those sectors?
So let me combine aerospace with outer space, with drones, the whole area of flying machines, small and big. I think there is an enormous opportunity in the broader tech aerospace area, though the downsides are that, due to safety and product development life cycles, it takes a long time. I think what will also happen is that there will be the whole manufacturing outsourcing, high-tech manufacturing outsourcing, which we have seen already in aerospace. The previous phase was design engineering outsourcing, where all these companies are doing as such. And the big reason will be, to my mind, initially, will be because, aerospace is focused on supply chains which are based in China and Southeast Asia, and to some extent Europe, or to great extent Europe. I think some of that will come to India. Overall. Plus, I've seen new products there. New products. I mean, there are companies in India who are designing urban alternatives to cars. which could be flying machines. There are 3 companies in India who are working on that project right now. So I think
Right.
there is opportunity there. Agriculture is to my mind, a huge opportunity. We are ourselves in tech agriculture in 2 companies. It's an area which traditionally has been focused on by impact investors. I think mainstream investors will come in. At the bottom of the layer, at 60% of the population, tech is very less used there. Average holdings are 1 to 2 acres. Crop productivity is low. So there's so many opportunities which we are seeing in that space. I think that will increase in the market space. Which is the other thing you mentioned?
No, so these were the 2 sectors which were keenly looked at. Last closing comments, which would like to have from all of you, kind of stuff. 3 survival mode tactics, right? What do you think should be doing across? In short, wrapping it up. Last question. Each one of you, what would you take across as a survival mode tactics? What are your top 3 top of the mind list? What a founder should do?
So I can start. I
Oh
think
yeah, Manu, go ahead.
just I think point 1, live to fight another day. So make sure you have runway to survive in the company. I think second, take care of yourself, because if you're stressed and making harsh judgments, you won't be able to set the course correct. So take time to both be physically and mentally prepared, and I think that's important. And third, remember, it's a cycle. We come out of it, right? Don't get too stressed. And I think number 2 and number 3 go well together. And I just use a simple sort of anecdote that I got a lesson to maybe 12 years ago. I was there was a crisis at my company. I was running Gmail at Google, and we did an all-nighter. I was on call trying to fix this problem. And my wife is a doctor, and so she was she was in Montreal, about 3,000 miles away, going to medical school, and so she called residency, sorry, and we always have a daily call at 8 o'clock at night, and I couldn't meet it because I was stuck on this call. So the next day when we were calling, and she was like, "Hey, why couldn't you call?" And I'm like, "Yeah, I was on call," and she's like, "I didn't realize that non-medical doctors also have calls, right?" They have a very different perspective of call, and so then she listened to me for half an hour ranting about all the crises we dealt with. And then when I stopped, she told me, "I lost a 7-year-old kid on my operating table yesterday," right? And I got the perspective, and you had, after tears started falling, you sort of realize, we get too stuck up in our shit sometimes, and we have to sort of focus on there's a bigger thing. And I think people are dying. There's a lot of pain and suffering, and pretty soon we will realize there's people that we know closely that have died because of this crisis. So remember, we will come out of this, and if you keep your head strong and focus on the right things, I think you'll be able to survive. And I think if you went into being an entrepreneur for the right reasons, you will find, if you find your North Star, you will come out of this North Star, right? And if you went in this for the wrong reasons, well, people will bail ship pretty fast. So you will find the strong versus the weak in this process.
That was a fantastic closing note, Manu. If a founder has to reach out to you at Inventus Capital, what would be the email ID? If you can just share, people can reach out, founders. You got almost touching to 350, 400 founders.
And the best way to reach out is through trusted source. So I would sort of say, find an angel or somebody else that can get in touch with one of us. But my email's on the website as well.
Okay.
Awesome.
Thank you so much, Manu. Coming to Amit, your survival mode, what do you think founders should be doing in these times? If somebody has to reach out to you, how do they reach out?
So it's always been said before that cash is king, and I don't think there's any other moment in history where that's more important, has been more important. And in a time like this, I always tell my entrepreneurs, you got to be the best salesman you can, or saleswoman you can. And the mantra that comes to my mind is beg, borrow, and steal. So you beg from your employees. You get time from them, you get salary commitments from them, you get support from them, you beg from your employees, you borrow from your investors. You got to pound them hard. You got to make sure that you get more money from them, and you steal from your customers. Get them to do upfront payments, get them to find cheeky ways to get money from them. So I think as an entrepreneur, you got to get cash in the bank. That's your number one job. And so you got to beg, borrow, and steal. My email is amit@jungle-ventures.com. The only caveat there is that if you write to me for a from an investment perspective, my assistant will respond to you for sure and let you know that it has been passed on to the investment team. The investment team will 100% look at it, but they will only get in touch with people that we are interested in speaking to. We are very conscious of your time, of our time. So we will definitely read it, but we'll only respond if we think there's something interesting for us.
Thank you, Amit. Thank you for that wonderful, way to dissect back, borrow, steal. I loved it. I'm going to use it, giving you
I'm
credit.
doing it. I'm an entrepreneur VC. I do it. I'm building my own business as many of people here. So I'm doing the same thing. I'm pounding my LPs and making
Nice.
sure I have more money.
Jishnu, your closing comments on survival mode tactics and how, if a founder has to reach out to you at Nexus, how do they go about?
Yeah. So again, number one, first survive before you start thinking of thriving. Knowing that there is light at the end of the tunnel. And that means like cash is king. So number two is manage your own emotions. It's extremely important as a leader to be able to do that. It's very lonely, of course, and that's where I think the role of a board member and investor becomes doubly important. That's when you also figure out who is the right board member versus who is not. So extremely important to manage your own emotions. And number three is often, and along with that, the counterpart is, often as leaders, we start thinking, if I'm taking an action, how is the moral going to be perceived by on whom I'm taking the action? The perception has to be flipped here. The idea really is that you will be doing the other person also a favor if you are being upfront and doing everything at fully transparently at the get-go, instead of trying to kind of make something out of it. And at the end of the day, reality is reality, and truth survives. So if there is no reason for you to pretend something that it is not. So always be totally upfront and what is the
Everyone
word,
has
like,
an
honest.
finite capacity. Everyone has a finite capacity. Be real, be authentic.
Correct.
I mean, that's
Exactly.
a great takeaway. How would somebody reach out to you, Jishnu, if they have to?
So again, Jishnu at nexusvp.com. And as Amit also mentioned, as one can imagine, we are always reached out. So usually, like we 100% go through all the proposals that come in, but you might see responses on things which are more interested than less. So don't get offended if you don't hear back. That doesn't mean that we haven't thought about it or we haven't read it.
Okay, awesome. Thank you. Sudhir bhai, lastly, at your end, closing comments, the veteran of the industry, someone who has seen so many insights, your wisdom would be very helpful. Please share.
Thank you, Sanjay. I think some repetition, but I'd like to add one more point to that. First and foremost, survival is absolutely, as everybody mentioned. But one caveat: don't cut to the bone. I think it's very important that if you cut to the bone, when growth comes back, you will not be able to pick up. So think of how not to cut to the bone. I mean, we've done this many times with in conjunction with our co-investors on the board, as well as with entrepreneurs. If you cut to the bone, you're dead permanently. Okay, so be careful of that. Second is retain your core teams. You can't do it alone. It's as Amit mentioned, we are entrepreneurs. I call ourselves venturepreneurs, right? Individually, all of us cannot survive alone. We need our key people along with us. So make sure you have that. There are two more points. One, do not forget innovation. This is the time. Just because you want to complete a mile in less than 4 minutes, as Emil Zatopek did the first time, it doesn't mean the next guy has to just run harder. There are techniques, there is science, there is technology behind it. There's lots of things. So think how you can innovate. Just realize in the last 4 weeks, there are companies in India who have made COVID test kits, which they never did earlier. How did they come up in the last 4 weeks? There are companies like Mahindra's who put a breathing apparatus, which is 7,500 rupees. They never did that earlier. So there is a market out there for the right things at the right price. And that means don't kill innovation in the company at this point. Last but not the least, the number of companies which are funded by VCs is very small compared to the 100 out there. So your business should be able to survive, if possible, without a VC. And VCs will come at certain points of time, but make sure that you're there. Do make sure that you are running. Businesses do not depend only on VCs. There is, out of 100, maybe 90 don't get VC money. Okay, that doesn't mean that the world is dependent on the VCs. And I'm not going away and saying VCs won't come in. VCs, there is a lot of dry powder, but there are a lot of companies who've done absolutely beautifully. So yeah, if VCs are not able to bring money, make your company survive.
Great wisdom. Thank you, Sudhir bhai. If you can help, founders know how to reach out to Chiratae Ventures, what's the best way to connect?
Yes, you can either go to our website. There is a contact email, address it to the specific people. Our website contains this thing. If you want to sign to me, Sudhir@chiratae.com.
Sudhir@chiratae.com. Thank you, all of you. It has been a pleasure talking to you. Thank you for your valuable time, giving global perspective. Uh, just as a closing note to share with all the founders, we at 100x.vc write the first checks. We are open for business. If you have to write to us, please email on pitch@100x.vc. And I look forward to making this as a regular affair now that this is a new normal. We'll love to connect with you in future. And thank you, TiE Mumbai. Lots of claps. Please follow TiE Mumbai on Twitter. If you like the session, please tweet about it, follow. All the VCs are available on social media. Amit, Manu, Jishu, and Sudhir bhai, all of have given their perspective. Thank you so much, all of you. Love you guys and stay safe. Thank you.
All the best,
Thank you
everyone.
very much.
Thank you, everyone. Thanks, Sanjay.
Thank you
And
all
but
very much for taking out the time. And for all the entrepreneurs, whatever questions that I saw on the side, coming Thursday, we are going to be doing a boot camp, which is specifically talking on, basically looking at operations, optimizing it, cost cutting. We have TCM from Sudhir's colleague from Chiratae Ventures, who's also going to be leading that. So folks, please join us. And this is going to be the hardcore questions that you've all been asking us in terms of what you need to cut in terms of cost, how are you going to manage the current situation. And we've got a bunch of good operations come CFO kind of expertise helping you look through your books and manage everything. And that's happening coming Wednesday, 1st April, 2:30 to 4 p.m. Thanks again, everybody. And we should be again back soon with all of you, maybe in about a week and a half's time when things might have changed by then. So we might have a completely different conversation then. So thanks again, everybody. And thank you all.
thank
Bye,
you
everyone.
Very much.
Thank you. Bye.
Thanks, Amit. Bye.